This podcast channel is about you, successful international entrepreneurs, successful expats, successful investors. Sponsored by HCJ.tax.
Going to be pretty simple. I'll just run through a really short deck. Probably it's not going to take more than 15-20 minutes. And what I'm going to do is focus on 6 things that I believe you guys as location independent entrepreneurs should keep in mind. And that frees us up for at least the last or the second half hour to engage in Q&A, because I think that's where the real value is. You guys have come here with questions, and while we may not be able to get into answers that you can act upon immediately, at least you will know how to look for the right team of advisors to help you do things in the right way or the most tax efficient way. So with that in mind, I will start my deck. Okay, wonderful. So as I said, it's going to be super quick. 6 things you guys need to know as location independent entrepreneurs or digital nomads, as some people refer to that lifestyle, that preference, right? So first thing would be a bit of background as to who we are, right? So my name is Darren Joseph. I'm a member. Well, my team is a member because there are 1 or 2 members of my team also in the virtual audience there. So our team is a member of a small regional practice called Moores Rowland Asia Pacific. I've spent the last 7 years being based in Asia, and Moores Rowland is a practice with a regional presence out there. I actually sit in Singapore. I'm not in Singapore right now, but I've been based in Singapore for the past 7 years or so. And because I am licensed by the US Department of Treasury, you know how this thing goes. I'm legally required to say that anything that we discuss here should not be construed as advice. We're having a general conversation about general principles. And what I hope you walk away with is an appreciation of the key concepts that you need to keep in mind as you find a consultant that can help work with your specific needs. But again, general principles, general advice, nothing I say here should be construed as encouraging you to be paying less than your fair share in taxes. So the usual disclaimer that keeps me out of jail. Thank you very much. So 6 takeaways. Here we are, and I'll just jump in, right? So the first takeaway is a concept known as flag theory. And again, this is a concept that I think is relatively well known, and I'm aware that there are some companies that actually carry the name flag theory, so they've incorporated it as their brand name, as their trading name. But it, as far as I can tell, is a concept that dates back to the 1950s, and essentially it's about having a diversified lifestyle, not having all your eggs in one basket. And especially right now, with things being a bit unusual, or perhaps this is the new normal, I think more so now than ever before, it's important. Now, this is something we could jump into later on in the Q&A, should anyone require it, but it's just one of those powerful concepts that I think is worth keeping in mind. The next thing is, this is one of my favorite, fake news. And what I mean by fake news is that when you go on to the online forums, the online groups, I don't go myself, but my team keeps me up to date as to what's being discussed. It is amazing to me, at least amazing to me, or amazing to us, that people put something as profound and as important as their financial well-being and the well-being of their company and the well-being of their employees in the hand of random strangers who respond to a vaguely worded question in a Facebook group. Even though you may think that that person has a similar situation to you, you'd never know whether there's something there's something slightly different about their situation, whether it be they have an extra residence or long-term residence or passport that you don't know about, or parents or key employee in a given jurisdiction, which may mean that that advice is relevant to them but may not be relevant to you. And it just it, it cannot be overemphasized that you need to speak with someone who knows your situation inside out. Some of the things that are often misunderstood is the place of effective management. What I mean by that is it's a concept called nexus, which we'll go into in a bit more detail later on. But it means that even though you may incorporate in jurisdiction X, because you're spending time or because you're exposed to jurisdiction Y, you may inadvertently bring your company into the tax net of another jurisdiction. So I'll get into that later on. I know it sounds a bit esoteric, but we'll dive into that later on. And then Estonia, I just use Estonia as an example. There are schemes that are well marketed and perhaps not so well understood. And they sometimes are marketed as a catch-all solution. It will solve any problem. It's a panacea. It's a magic pill that would solve every problem. But the reality is it's hardly likely that there's one solution that'll fit everybody. A third point I wanted to raise on this heading is immigration rules. And nowadays, this is perhaps less of an issue because immigration rules, all the immigration rules that we knew from 2019, they more or less completely disappeared, and each jurisdiction is almost writing the script from scratch. And I think I don't need to say that these new rules, the new rules are being drafted jurisdiction by jurisdiction. They're being viciously enforced. So yeah, so it's just that sometimes people make suggestions or take advice or devise plans without regard to the actual rules and the laws of the jurisdictions that they want to spend time in. And when it comes to tax, of course, that's our sweet spot. People paint with a really broad brush, saying things like, I can stay in Portugal, for example. I'm in Portugal right now, just outside Lisbon. So you can stay in Portugal and work and it will be tax-free. I know there's something called the non-habitual residence program, but it doesn't exactly mean tax-free. Or if I form a company in Cayman, BVI, or insert your Caribbean island here, it means that I will live tax-free. Not exactly, and we'll get into that a bit later. Now, when we talk about people who have structured a lifestyle in which they pay no tax, it's possible. It could be tricky, it could be quite difficult, but I've seen it done, and I've seen it done in the right way. But what most advisors and most location independent professionals forget is that, yes, you're thinking about tax rules, but there are also banking rules. And the way the world of finance is evolving right now, banking rules are often trumping, no pun intended, tax rules. So banking rules are something to pay attention to. We can get into that a bit later. But the takeaway from this one slide is, please be very, very cautious when it comes to taking advice from random faceless strangers in social media groups. Okay, yeah. So now we get into the third one. Remember, I'm saying that I just want you to take away 6 points, right? And this is number 3. Number 3 is direct versus indirect taxes. People are pretty clued up for the most part when it comes to direct taxes. So they understand that, hey, I have a company, that company often has to pay corporate tax. That's pretty vanilla, that's pretty generic, right? And people appreciate, you know what, I spend more than 183 days, I'm exposed to jurisdiction X or Y, I need to pay whatever employment related taxes or individual taxes. And that's something, it doesn't shock anybody, it shouldn't really. But I think one area that kind of slips through the cracks is indirect taxes. So especially for people who are into drop shipping or have some sort of e-commerce store, they are sometimes unaware of the complexity of indirect taxes. So like VAT in Europe or sales and use tax. in the United States, or GST in some jurisdictions in Southeast Asia, or even people who just provide services online, depending on which jurisdiction they're in, they may be exposed to services tax, like in Malaysia. So indirect taxes, again, the takeaway is when you're putting together your plan, when you're working out whether a certain business is viable, I get that direct taxes. The takeaway is remember that there are indirect taxes as well. Now we take a deeper dive into the place of effective management. So basically, what we're trying to say here is that when you incorporate a company in one jurisdiction, but you as the key decision maker or wherever your leadership team may be, if they are doing business in another jurisdiction, a jurisdiction other than that of the company's domicile, you may inadvertently pull your company into the tax net of the country in which you are based. So let me give you an example. So everyone is pretty aware of there's certain jurisdictions with low or no taxes. So for example, Caribbean island, right? So let's say BVI or Cayman. That's okay, right? So it's zero tax. Okay. But if you are the key decision maker, you have to be somewhere, right? You're not going to be suspended in space. So wherever you are, chances are it is a jurisdiction that recognizes a concept called nexus, which means that you are making decisions from within their border. So you have a BVI company and you may be in Portugal, or you may be in Bali, or you may be in Thailand. The point is that you are in Bali and you are running your company from Bali, even though the company is in another jurisdiction. Technically, your company should be taxed as an Indonesian company. Or you form a company in the Seychelles and you're based in Australia. Okay, I understand it's incorporated in Seychelles, but it's being run from Australia. So therefore the ATO will want to tax it. So just be aware of not just where you incorporate, but where you choose to spend time. If you become a tax resident of another jurisdiction, there's a strong possibility that your company may be drawn into that tax net. So that's your takeaway. That's number 4. So yeah, I promised you 6 points to take away. We're number 4. Let's move to number 5. Oh, okay. Well, before we move to number 5, yeah, I'll get to the US soon. I know somebody mentioned the US in the chat box below. So staying with number 4. So nexus. So when we spoke about the place of effective management, we're talking about physical nexus, but nexus, as I'm saying here in this slide, is a generic term meaning just connection in general. So depending on the jurisdiction, it may not be necessary for you to be there for nexus to be constituted. And the typical example that we come across in a day-to-day basis. So today I was speaking to someone in a Southern European country. So I'm in Portugal, he's next door in Spain. And he is running an e-commerce store that targets the US. He has no staff whatsoever in the US, but he's selling through Amazon. So therefore, it passes through, his products go through Amazon warehouses. That constitutes nexus. So in the states in which Amazon warehouses his products on its way to the final consumer, taxes are going to be triggered in those states. And then some states, you have 50 different states, 50 different rules. Some states have economic, I mean, it's more or less, if I'm generalizing, I know it's dangerous to generalize, but most states are in the process of, if not having already shifted the concept of nexus to embrace economic activity, not just physical presence. So historically, you needed to be physically present, but right now, no. Just by having sales of a certain threshold in a given state, you create a taxable presence. Generally speaking, I know it's not every state, but in many states, that's the case. And those that are not yet on board, they will be on board soon, especially as budgets need to be balanced. So be aware of whatever jurisdiction you're selling into. Be conscious of the need to inquire and understand what's next, how is nexus defined in that jurisdiction, to make sure that you don't fall afoul of those rules. Now, yeah, number 5, let's get into the US. And yeah, okay. All right, so what I'm going to do is touch again generally on three, how I divide the world into three. This is when I'm dealing with private clients, so people like you guys who are digital nomads, who are location independent entrepreneurs. I put you in either in the category of those that are US exposed, and what I mean by that is you have a US passport, you have a US green card, or you trigger what we call substantial presence, which means you spend 183 days. And the way the US calculates it, it's not just 183 days in 1 year. There's a look back period of 2 years. But let's say somehow you trigger US tax residence. These are the things you need to be conscious of. There's an opportunity to benefit tax-wise from being outside of the US, from spending time outside of the US, and that's in the form of the foreign earned income exclusion, which I abbreviate as FEIE. This is section 911 of the US tax code, which means that depending on where you go, maybe the first $100,000, $150,000, $160,000 of your earned income may be sheltered from US taxes thanks to this exclusion. So this is something definitely to speak to your advisor. You know, people are talking about moving within the US, so people moving from California to Texas or New York to Florida, and the tax benefits that come with that. Consider moving one step further outside of the US, and you're not just moving from, let's say, 13% tax in California to 0 in Texas, but at the federal level as well. You can eliminate state taxes completely, potentially, and protect the first 100, 120, 130, 140, depending on where you go. $1,000 of your earned income could be sheltered from US taxes. So it's a powerful incentive. The nominees, I mentioned nominees because people have there's still this myth and this unfortunate misunderstanding that, yes, you know that if you have a company, if you're US exposed and you have a company outside of the US, that company needs to be declared on your US tax returns. On your personal returns, you also have to include your corporate returns. We know that. And unfortunately, some people seek to circumvent that by using nominees. We see that especially in your Philippines, especially in Indonesia, you know, South America, whatever the case may be. You try to use nominees, but US tax rules, that strategies, that's like decades ago. That's like 80s or something, you know. There are many rules in place to catch you out on that. So nominees do not shield you from your US tax responsibilities, i.e. declaring the existence of that company, and in some cases, paying taxes on the revenue of that company, even though it's not distributed to you in the form of dividends. So nominees do not work for US tax purposes. Next, banking. The US tax code, it seems counterintuitive, but if you don't pay your taxes, then yeah, you have interest and penalties. But if you don't declare the existence of bank accounts outside of the US, you're looking at not just civil, but criminal charges as well. And when I mean civil, it could be as high as 50% of the unreported balance. And the criminal charges can mean jail time. And this is very, very real. There have been cases where people have been prosecuted, right? So remember, you need to report those bank accounts. Estimated taxes when you are in the US, especially if you're a W-2 employee, taxes are withheld every month or every fortnight or however often you're paid. When you're outside and you are freelancing or you are working through your offshore companies, remember that you still need to report to the IRS quarterly. The IRS does not like to wait until the following April to get your taxes. They want to get it along the way, at least in quarterly installments. Otherwise, you'll be hit with underpayment penalties. Next will be state taxes. Most states in the union are domicile states, which means that even though you may not live in the state for the entire year for years on end, there are certain circumstances where you are still trapped within that tax net. So you must take specific steps to sever tax resident with your state before you go abroad. And that's something you'll speak with your consultant about. And yeah, I have some examples of how seriously the US government is taking it. A couple of years ago, I had my first client whose passport was seized by the US Embassy. So she has been traveling and she has not been so diligent when it comes to paying her taxes. And unfortunately, when she went to renew her passport at the US Embassy in KL, they said, "Oh, you're on our system. We will hold on to this passport, which will soon expire, and we will not issue you a new passport until you correct your situation with the IRS." And so she was all obviously panicky without a travel document in a foreign country, and our team is rushing to get her up to speed. So don't let that happen to you. As of 2, 3 years ago, the State Department does speak to Treasury. So, i.e., if you have any problems with the tax side, they will tell state and your passport will be in jeopardy. It's real. And another case study is that's Malaysia and Bali. I was speaking to someone at a bar in Bali, and he was explaining that, okay, well, he's trying to catch up on his US taxes. And he met a guy in the bar who says he knows a guy. So a guy who knows a guy, right? I mean, how cliched is that? So he knows a guy that'll do his taxes for cheap. Yep, he got it done for cheap, but the guy allegedly messed it up. So whatever I mean, I don't know, but whatever it is that was submitted to the IRS was deemed to be so egregious that the IRS came after him, and he was scared to go back into the US. Why? Because he tried taking a shortcut. Don't take any shortcuts, guys. Make sure whoever you're dealing with is fully qualified and understands your situation. And remember, taxes is like medicine, just because someone has a medical degree doesn't mean they can deal with your condition. So, if a virologist may not necessarily be able to do cardiac surgery. So, you need someone who specializes in whatever your area of practice. And there's some other examples as well, but I won't get into that. I'll probably get into that in the Q&A. So the rest of what I call CANZA, so Canada, Australia, New Zealand, UK, obviously there are common law jurisdictions with very, very similar tax codes, born of UK common law. So the takeaway is that for all of these jurisdictions, there's a fallback position. By merely leaving Canada, the UK, Australia, and spending lots of time outside does not mean that you sever tax residence with the relevant tax authorities. You need to establish tax residence in another country in order so that the home jurisdiction does not pull you back into its tax net. So being a perpetual nomad on a Canadian passport, Aussie passport, UK passport, it may not work because of the fallback positions. Again, in Europe though, so when it comes to Europe, not all the European countries have it. Some do, some don't. But even those that do, with one or two notable exceptions, there are ways of working around it and registering as non-resident. But of course, you need to speak to an advisor who's qualified, who's so qualified to make sure that you don't get any surprises later on, right? Again, I gave some examples of different European countries, but the takeaway here is that you need to go through the proper steps to sever tax residency in your European country of origin. And it's advisable that, again, I know that there's some exceptions, that you do establish tax residence somewhere else. Okay, I'll leave it there. The rest of the world, Okay, well, you may think, hey, I'm not European. I'm not from, from Kanzuk. I'm not American. Then I'm free and clear. I could be a perpetual nomad and pay nothing. Well, you can, but, there's always a but. Remember earlier on, I mentioned that you need to be cognizant of banking. So I'll give you lots of examples. We had a client in Southeast Asia. He is a DJ, and he does EDM. I'm not into EDM, so but apparently he's somebody. He's famous or popular or whatever. So anyway, he's done pretty well for himself, and he has decent bank balances outside in certain banks in Southeast Asia. Now his mom became unwell, and he wanted to return to his European country of origin. Just a random example. That's no problem. He still has his passport. Passport is valid. He needs to take care of his mom. He wants to be close to home. He wants to transfer money back to get her proper private medical attention. He wants he wants the best for his mother, right? And he's been banking with this one particular bank since he was a kid. And yet, when he tried to repatriate his money back to his country of origin, it was denied. I mean, the bank basically told him, we're going to have to send it back, because most banks have pretty strict AML rules, anti-money laundering rules, which means that once you're depositing money, and somebody's going to ask, well, what's the threshold? It varies by bank and it varies by circumstances. Anything that's unusual. So if you have a bank account that has been barely used for years, and suddenly there's a $10,000, $100,000 or euro or pound sterling or whatever deposit coming in from overseas, even though it's from you, the question the bank is going to ask is, prove to me that this money is legit. And what you're going to do. So in his case, he says, well, don't you know who I am? Check my website. I'm somebody, whatever. And the bank was saying, well, yeah, but that still doesn't prove to us that this money is clean. This money is legit, has been earned in a legitimate way. Some people would say, well, then I'll show them some invoices. But then I say, come on, give anybody 5 minutes on Microsoft Excel and they'll show you invoices. Invoices don't prove anything. What banks, it varies by bank, of course. Each bank has its own policy. But what I would dare to say is that most banks would accept a tax return from another country, because it's a government document that says that this money has been earned in this way and it has been legitimately taxed in its point of origin. So there are going to be no problems on the road. The bank is not going to be exposed to any reputational risk, or worse yet, any fines for facilitating money laundering. And if you've been following the financial news for the past few years, you know that every major bank has had problems with this, and huge fines have become the norm. So even though you may find a way to move around the world and earn money without paying taxes legitimately, remember the banking rules. However you earn that money and wherever you bank it offshore, it may be frozen there. You may be unable to move that money into another jurisdiction. Why? Because you cannot prove that it's not, Narcos, Netflix, it's clean. You need to be able to prove that the money has been legitimately earned. So please keep that in mind. So, and number 6 is, you need a team. With all the stuff that we have discussed in the past few slides, I think it should be pretty clear to you that it's impossible for one person to know everything. And if you meet someone who claims to know everything, then I would run, because definitely nobody knows everything. So what you're looking for ideally is a team that understands your situation and that has exposures in the jurisdictions in which you're likely to be exposed. And that's it. Now, what I will do is I'm going to stop sharing, and we can go to the Q&A section. So there's some questions here, I think. I'll walk through the questions. Please feel free to type. Right, somebody moving to Portugal next month. Definitely Portugal is quite popular for a number of reasons. But do keep in mind that when they say, especially if you're going to enroll in the NHR program, the non-habitual residence, and many countries now have some variant of it, especially European countries. A few do not, but many do. A scheme where you can live there, but your money is not being taxed. Understand that it's nuanced. Pay attention to the fine print, and some sort of financial planning or tax planning may be necessary. Please keep that in mind. If it is that you intend to work remotely and you are working in that jurisdiction, remember the place of effective management, that slide that we had. Keep in mind that your money may probably still be taxed. And most European countries, they tax you on your worldwide income. So please, it's always worth having advice before walking into another jurisdiction. Scrolling down now. As a US citizen but new Portugal resident, do I have to pay US taxes? Turning in the tier tax rates in Portugal. Definitely, regardless of where you reside on planet Earth, you must, and you are US exposed by virtue of a passport, a green card, or having substantial presence because you spend a lot of time, which has been happening a lot, right? Because of the disruptions in travel and flights, many people have spent more time in a jurisdiction than they planned to, simply because they could not travel. They could not leave, they could not return to the country of origin. So there are quite a few people that spent more time in the US last year than they planned to, just because they could not get home. I was listening to the news at 38,000. There were, like a few months ago, there were 100,000 Australians who could not return to Australia. Now that's down to about 38,000 Australians who cannot return home. And it's not just Australia, it's not just New Zealand. There are countries all over where people cannot get home. And that exposes them to being caught in another country's tax net. But anyway, as a US person, however you are exposed, regardless of where you reside in the world, you will be subject to taxes on your worldwide income by the United States. Even if you're an astronaut on the space shuttle Mir and you've been in space for a long time, you're still subject to taxes. So yes, you must file and pay taxes. As to how much you're going to be paying in Portugal, it really depends on your situation and the nature of your income. So Portugal has the NHR, which is really popular, but there are also nuances within it. So it depends on the nature of the income. So whether it's self-employed income, if it's in a field that Portugal has identified as high value and they publish that every year or every how often they update that list, it's treated differently. If it is that you are traveling and then returning to Portugal, that income may be treated differently as well. So again, you need to speak with a Portugal tax professional. And we actually do a webinar. We have a webinar coming up, a repeat on Portugal. I think this is going to be the third time we've done it. I do it with my colleague who is a Portugal tax attorney. And we do the tag team thing for people who both US and Portugal exposed. So maybe you can join us on that, or you can reach out to me privately, and I can obviously speak to you about the US side, but he can speak to you. Of course, it'll be a consult, so it's not going to be free. You tend to get what you pay for in this line of work. If you go online and you get something on Facebook for free, take it as free. So, caveat emptor, buyer beware. If you go to someone who's properly qualified as a tax professional in Portugal, you're going to get a different answer. Somebody who, the thing is, when we as professionals, we give advice, we put our license on the line, which is different from someone who is a YouTube influencer or an admin in a Facebook group. They have no license. If they get something wrong, oops, your problem. That sounds like a you problem. Deal with it. Bye. Whereas if we get something wrong, our license is in jeopardy, we can be sued. So we carry professional liability insurance just in case we mess up, because we are held to account. So that's why we always need to proceed very cautiously. And you can tell those people who are very liberal with their advice because they have no license to protect. And just to be double sure, they always do their YouTube videos or whatever from let's say a less developed jurisdiction, from a Belize, from a Malaysia, somewhere where it's not policed, where you can say whatever you want and you can give whatever advice you want and there are no consequences. But, take it as you will. Scrolling down, I work remotely, earning income from the US. Okay, Portugal, right? I'm starting an online business selling digital courses. I'm particularly concerned about indirect taxes. As far as I understand, it doesn't matter where I set up my company, that company will have to pay local sales taxes where it sells its courses. I'm from Colombia, so even if I set up a company in a low tax jurisdiction, BVI Delaware, that company has to pay indirect taxes in each country in which it sells courses. How does a small company pay taxes in dozens of countries simultaneously without huge bureaucracy? And unfortunately, I mean, to be fair, people fly under the radar when if it's a small number. But most people that I talk to, they get into business because they're passionate about what they do and they hope their business is successful. So even though it starts off small, you do it with the drive and the passion that you hope that it goes somewhere. So at some point in time, you will pop above the radar. So it's unfortunately there is no easy answer to that. You have your business plan, you have your pitch deck, you have whatever. You need to speak to an advisor or a team of advisors who are not just aware of, but hopefully qualified with it in the jurisdictions in which you're exposed. And you need to take advice from them. And unfortunately, good advice is not free. So I wish I could tell you something else, but for the most part, most of the businesses that we work with, they approach things incrementally. So you may start off in Spain or you might start off in Colombia and then you move, okay, I'm moving to Panama or I'm moving to Venezuela and I'm expanding gradually. So that incremental approach allows you to do things in a measured way. So you start with jurisdiction one, make sure you get things, you're building a foundation, make sure you get the right advice and you're fully compliant and you have no surprises down the road with jurisdiction one. As you expand to the next jurisdiction, again, as part of the market entry process, I mean, I know it's a digital product and digital product, the rules are brand new because most jurisdictions are playing catch up when it comes to digital products. The rules are brand new, so sometimes even tax professionals who've been in the game for a while, they may not be aware of the brand new rules. So you need to make sure that whoever it is you're dealing with is up to speed. And as part of the market entry process, I mean, you're looking at payment platforms, you're looking at distribution, you're looking at affiliates, whatever links you're doing. Part of that due diligence process must be, I need to speak to a tax professional to make sure that I'm on the right side of the tax authority there. So that's just the way it is. Yeah. Scrolling down and yeah, that's it. Oh, another big question. I am attached to a company. I don't own it, where I have some level of freedom to choose between some places of work in a year. And I'm able to choose between Singapore, Malaysia, Indonesia, Australia, New Zealand. Is there a tax advantage to moving around? Well, okay, so it depends. Oh, the first thing you tax professional want to know is, okay, you don't own the company. Are you an employee or an independent contractor? That makes a difference, right? So, and then you need to look at, well, all the jurisdictions you've looked at there, you've mentioned Singapore. Well, I know Singapore, Malaysia, I know Indonesia, and I'm familiar with Australia, New Zealand. All of those jurisdictions, if you spend enough time there, you will be subject to taxes on the work that you're doing remotely. It just is, and just roughly speaking, it's 183 days. So if you spend 183 days plus in a calendar year, and that includes visa runs. Well, back in days when there were visa runs, that's a 2019 thing. There are no more visa runs. If it is that you're given permission, right now you need to seek permission to enter Singapore and Malaysia, and it's a very short list of people who can get in Indonesia. They were letting foreigners in, but like I think it's last week, they have like zero foreigners people who've been paying agents have lost their money. People are complaining online. Indonesia, I said that 38,000 Australian citizens trying to get into Australia. So good luck as a non-Aussie getting in. Similarly with New Zealand. So let's assume that you do get in. It will probably be on a long stay basis because that is the new normal. There's no more hopping around. I think that is 2019. In 2021, whichever jurisdiction lets you in, it's for the long haul. By the time you do your 2-3 weeks quarantine in Thailand or whatever, I mean, it's a long stay you're going to be there for. So it's not impossible to imagine that you'll easily hit 183 days in a calendar year. And therefore you will be subject to taxes on the money that you earn. Even if you're doing it online, you will be subject to the taxes of that given jurisdiction. In this case, Singapore, Malaysia, Indonesia, Australia, New Zealand. That's nice. So there is no tax advantage to moving around. Not anymore. And even when there was, it was dicey at best. A lot of people were surprised, as I mentioned, the case of the DJ. At some point in time, you would need to prove that the money that you've gathered, wherever it has been accumulated, even if they were paying it into your bank account back in Europe, at some point in time, that bank can say, hey, can I see a tax return for that? We're just doing, just usual checks on our clients, making sure all our clients are, satisfied with our service. Can you prove that money is legit? You're going to have a problem. Next question. For US citizens and the IRS, I heard of 35 rule and 183 at 182 day when it comes to foreign income. Can you clarify the difference? If you are US exposed, we're talking about the Section 911 foreign earned income exclusion, where the first 100K up to 150K of your income is excluded from US tax. Now you can qualify for that in one of two ways. One would be based on, the easier one to understand is physical presence. So basically don't spend more than 30 days on US soil, spend the rest outside of the United States, and you will be able to benefit from the foreign earned income exclusion on the basis of physical presence, the physical presence test. That is relatively objective. Everybody gets that. Now, the second basis for qualifying for the foreign earned income exclusion is the bona fide residence test, and that is subjective, and that is more difficult to grasp. Why? Because essentially, it's a test of intent. So what you need to prove to the IRS when you're filling out that, or whoever is working with you to fill out your Form 2555, is that your center of life has shifted from the US to a foreign jurisdiction. So you have a visa that allows you to stay long-term in that jurisdiction. Ideally, you're paying taxes there. You maybe members of your family there. You either rent or own a home there. That proves that you are a bona fide resident of Bali, you're a bona fide resident of Singapore, you're a bona fide resident of Portugal or Spain or whatever. Therefore, you will benefit from the foreign earned income exclusion. So those are the two ways. Scrolling down. Okay. All right. I think that's it. Any more questions? Nope. Okay. Thank you for your time. And just remember the 6 ways in which, 6 things that you should think about as you continue or begin or continue on your journey as a location independent professional. We at htj.tax. Hannah, my colleague, she put our coordinates for our social media in the chat. Feel free to reach out to us with any questions that you may have, if you want to consult, or if it's, I mean, as I said, I don't know everything, but if it is a jurisdiction with which I'm unfamiliar, with which I'm not qualified, I will introduce you to our colleague here in Portugal or in Singapore or Bali, Indonesia, or Malaysia, Thailand, Australia, New Zealand, wherever the case may be. So thank you for your time. Have a good night. Have a good day. See you guys next time.
4 ways we can help you. Number 1. Sign up for free webinars on US expat taxes and international entrepreneur taxes at www.htj.tax. Number 2. Stream premium educational videos at www.htj.tax. Number 3. Contact us for tax optimization consult over Zoom. Number 4. High net worth. We can quote for doing your US international taxes returns. Our books and upcoming event are available at htj.tax. Please subscribe, like, share, and comment below. Email us at help@htj.tax to engage us, to advise on international tax or business matters.